Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, January the 21st, 2011. It's time to look at the markets. Check it out. Okay, this week I'm going to start off looking at the Hong Kong Hang Seng Index. I want to show us a particular pattern here that we're going to see develop in the U.S. markets as well, so pay attention here. You've got a nice pullback here, a bounce up here to resistance level, pull back down, bouncing around, pull up here, sell off, break through resistance, and all the way up here, getting a little bit overbought, and then we started pulling back down here. Previous resistance level begins to act as support once you had a breakthrough above a close above that. So when we had this little sell-off going on here, I was watching it looking for that reversal signal. We got a bullish engulfing signal, which is my buy signal. Got that right here. We are in an overall very bullish uptrend. I told you that when it happened. And we had a nice trade to the upside here for 3 weeks. Started a little weakness. You could be out at this point or just holding. Whatever you're doing here is up to you. I personally would trade to this point. Once I started seeing weakness, I'd be gone. But that's just me personally. The main thing I want to draw out here is that this overall pattern is very bullish. And to expect when you do get a breakdown, or you'll notice here it wasn't a bearish engulfing, it was just a sell-off here that began to turn into a pullback, and that pullback continues until it finds support, and then you look for that bullish engulfing signal for the new way into the market. Okay, here we are looking at the BSE India Bombay Stock Exchange, same basic pattern up here to resistance level, pull back down, come up here, and then the breakout. Okay, so once you've got that breakout, all right, you've got a resistance line, and it's about right there actually, and then you had a nice advance up here, get nice and overextended. Okay, and then we started to sell off. In this particular case, the sell-off forms a bearish engulfing. This candlestick completely engulfs the previous candlestick. It's a sell signal, and this would be a sell sign that you would use, and you could have made money on the downside here. I typically pass on the first one that I see simply because it's still in an uptrend, and that's a, it's better to work with the trend than against it. In this particular case, you were in an uptrend back here, so the fact that you got a sell signal in an uptrend is not as helpful to me as a situation where you've got a break of the trend, then an advance, then a sell signal. I prefer that one. So in this particular case, you had the sell off. You do not get a bullish buy signal here. You don't get a bullish engulfing. You advance again, you get another sell signal. You could have used this one, made money here, but notice where it stops. All right, here's the resistance. Here's the resistance. And then once you get the breakout, it becomes support. So that's where you're finding support at. All right. Again, just because you've got support line here and you're seeing a good week or something like that, it doesn't give me a reason to go long. I have to see a bullish engulfing to go long. We didn't see it back here. I didn't take it. We did get a bearish one, so we could make money there. But at this point, that trade is over. You're waiting for this to give you another opportunity, another trade. Okay, let's have a look here at the Russell 2000 Small Cap Index here in the U.S. Here's the sell-off. Here's the advance to resistance. Here's the pull back down, bouncing around a little bit. And then we come up here and we break out, pull back down, and advance again. All right, here's the resistance. Now acting as support, once you've got the breakout, like you do here, all right, it's going to act as support. So now you've got a sell-off here. Again, not a bearish engulfing, so this is not a sell signal. It's just a pullback. This pullback, you would expect to find support at this level, just like you did with the Hang Seng, just like you did with the BSE index, so forth and so on. So keep an eye on that. When you see the opportunity for a buy signal set up there, if you do, then you would be able to use that. And again, this is an overall bullish chart configuration that I'd be looking for that pullback to then form a bullish opportunity. If I could find one, I would use it. Quick look here at the NASDAQ here in the US, same story, resistance level. All right, pulls back, does a little dance, breaks out. All right, so here we have the resistance level, and that's going to act as support. Now we have pulled back here this week. It's not, again, not a bearish engulfing signal, therefore it's not a sell signal, but you could still continue to pull back and then be looking for a reversal signal. Once you get that, that would be my cue to play ball on the long side. Quick look here at the Dow Jones Industrial Average. Same overall story as far as the overall chart pattern, but this one is not showing any weakness thus far. So what we have here is the resistance was here, broke through here, found confirmation here, breakthrough again, advanced to the upside. And you'll notice you're respecting the uptrend line, no signs of weakness, 8 consecutive weeks to the upside, and a continuation candlestick formed this week, which is tell you to look for another move to the upside again. But you are getting overextended here. You're at 71.37, so you could see a pullback anytime. but let the pullback happen. Remember, don't anticipate, and think you know when the peak's going to be. I actually did an analysis, a test on all my calls for the past 52 weeks, and I found 188 calls that I had made. So I had 84.3% accuracy over the course of a year. I then decided to see what my accuracy would be if I omitted all calls that were counter trend. In other words, if I was in an uptrend and I saw a sell signal, I would ignore that one and I wouldn't take it. And if there was in a downtrend and I saw a buy signal, I would ignore that one. I wouldn't take it. I'd have to have a confirmed trend with a and like, for example, if I had an uptrend, I could take a buy signal. If I had a downtrend, I could take a sell signal. But without those two things being together, I found that whenever I didn't have those same things in line, my accuracy was only 84.3%. But when I did like I was supposed to and didn't try to counter trend trade, I found that my accuracy increased to 96.4%. So that's an important little tidbit of information for you. Right now, this is still a hold on the long side if you're still long, and you would keep a tight stop and just trail it up as you go. Again, if it does pull back next week or anything like that, look for the previous resistance level to act as support like you've seen in the other markets. Okay, look at gold. We had a sell signal here, bearish engulfing. I didn't take this one. It's the first one in the overall pattern there. Not going to take that. And if you did, you're still moving to the downside, advancing your stop as you go. Keep in mind, previous resistance was here. So that's going to be your support line. That's where you're going to see buyers coming in. You've got several different supports here. You've got this one. You've got this old uptrend line here. You've also got this 50 period moving average and this upper Bollinger Band line. So that's a lot of support right here. You start getting down in this level, you can see buyers coming back in. Okay, a quick look here at the FTSE. Same kind of story going on here with previous resistance here, sell off, doing this whole number. But I want to note something here. You do have a breakout here, goes back, consolidates, advances again, and now it's consolidating. But in this particular case, we do have a sell signal right here. This bearishly engulfs the previous candlestick, but it is counter trend. The trend is still up here, so that's the first one that I would point out that it's there, but I won't personally take it. It has to be confirmed by the trend for me to take it, okay? If you're a bear and you want to take advantage of that, you'd simply short here with a stop right there. Just be looking for a test of this previous trend line right here, okay? S&P 500, same story as you've already seen drawn out on the other ones. This one is not actually showing as much weakness as you might see on the NASDAQ or the Russell, but it is showing more weakness than you find on the Dow Jones Industrial Average. In this particular case, you can see that you're not all that extended from the primary support right here, so pull back here would probably just be to this upper trend line. I don't see I'll pull back all the way to this point. It could happen, but if it did, keep an eye out for that bullish engulfing opportunity, okay? And those of us who are still long this particular index, you can still be long with a tight stop, or you may be out at the first sign of weakness right there. You were bullish from this point. We had a bullish engulfing, and traded it up for a few weeks and made some good money, and pocket that. Silver looks a lot like gold. It's had a sell signal back. I'm sorry, not silver. We're looking at Canada's markets. You had a sell-off here and sell signal. It was again counter trend. The trend is up, and then you've had a nice pull back to the support, bounce back up. Now we're pulled back to support again, still respecting support, but you could break down. The key thing here, same old story, right? There, breakout, advance. And if you pull back, there's going to be your support line. But more importantly, in this particular case, you've got support by the middle Bollinger Band line, this old uptrend line here, this support line here, this 50 period here, this 200 period here, and this lower Bollinger Band here. That's a lot of support to chew through. So keep an eye on that. That could actually just turn sideways in this particular environment, or a slight pullback, very shallow, and then it moves to the upside again. But in any event, just watch your signals for your bullish and bearish engulfings. Now we can have a look at silver. Very bullish chart here, more bullish than gold's chart. A nice consolidation pattern, a nice breakout. Means this is going to be your support line. Advance up here and sell signal right there. Pulling back. You're going to have support at the middle Bollinger Band line, but most important, of course, is going to be this big bunch of tight trend lines right here that are all going to add as support. So I don't think you'll get anywhere near this level before buyers come back in, but in this particular case, this is what's going to be driving buyers. They're going to see this as being something that they're not going to be able to break through unless some major catalyst happens. But without that, just normal trading situation, you're just going to see it move to the upside, a pullback, 50% retracement perhaps, and then an advance back up the other way. You could reverse next week for all I know, but the main thing here is watch for the reversal point. If I get a bullish engulfing, I'd be a buyer. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, for those of you guys who are interested, we also did put 2 new positions on our portfolio late this week. So check that out. If the market continues to move to the upside, we will make money on that. We also have some capital in case we do get a pullback, so we can use that when that opportunity is created, okay? There's the disclaimer. Read it and weep. God bless. Take care. Enjoy your weekend. I'll see you all on Monday.